I want it as much as I can in US dollars. Is that still the biggest currency around the globe?
Oh, absolutely.
Always has been, always will be. The greenback, the folding stuff, the cash.
Yes, and Trump's supposedly going to have a 250-year celebration of the the creation of the United States. There's going to be a $250 US bill.
Wow. And
some people talking about putting his face on it because he's the current. No, seriously, that's a serious treasure. People are saying, why don't we do that? So there's going to be a $250 US bill coming up soon. Anyway, I better introduce
Your associate is here, Dr. Michael Saba.
Yeah, he's going to give us a quick fixed interest market update. Then we'll take some calls on tax-effective investment. So, Mike, what's happening in the world of the fixed interest market with all the combobblies?
Yeah, fixed interest means interest rates.
Yes.
We have short-term and long-term interest rates, and they are driven by the level of inflation. So we've unfortunately seen inflation rise and central bank in Australia put interest rates up. We had the latest CPI number last week, which was a little lower than expectations, but still well above the RBA's range.
And petrol hasn't helped either, has it?
It did pull it back a little bit, but that's artificial. So when that goes, then you'll see that CPI number go back up.
Yeah,
so
but will it go?
That's up to the federal government.
Yeah, that's right.
And politics. So it's well above the RBA's rate level. So there's a meeting in the RBA on June 16. Whether they rise rates again is uncertain.
There'll be nervous borrowers around.
Yeah, possibly not because the inflation rate was a little lower. So hopefully we're off for another 6 weeks.
Probably the most important RBA meeting of the year, I reckon, in June.
The next one, if they do raise rates again, that will tip the economy.
We are stuffed if they raise rates. That's an official word.
That's an official comment from Dominic. We are stuffed. Hey, what happened overnight?
Overnight, actually, the markets have just been ridiculous. Do you know the American markets have rallied 20% in the month of May?
Have they?
Yeah, it's amazing. Anyway, the Dow Jones was up 363 points. The Nasdaq was up 55 points, and the S&P 500 was 16 points higher. Based on positive Middle East sentiment, they reckon something's going to happen. And we heard a rumour. Can we say that, Mike? Can I talk about the thing we're talking about?
No.
No.
Well, why not?
No, because
we don't spread rumours.
We don't spread rumours.
Oh, it's not fact.
Well, yeah, we better check it out. Maybe next week I'll tell you.
All right, then.
The US market has risen, as been over 20%. Across the Atlantic, London's FTSE was 17 points low with the French, German and Italian bourses mixed. Gold rose 1.34% to $4,593 an ounce US, and West Texas Intermediate fell $1.54 to $87.36 a barrel. So they were talking about it, West Texas Intermediate being 200 or 300, so it's gone up to 100 and it's come back to 87 at the moment. And the ASX 200 SPY is 13 points lower, pointing to a soft start to trading on Monday, following Friday's effort, where our market rallied over 1.6% on Friday, because we clawed back a whole lot of really bad days we've had before that. So my Australian market's been average. US market has just been phenomenal.
Joe has been hanging on for a while, and we say good morning to you.
Good morning.
Hi,
I'm
Joe.
asking a simple question. We have a wonderful young manager who looks after our super for my husband and I, who are both retired. And every time we see him, we just feel this massive sense of relief, and he's just doing a great job. And I always want to buy him a gift, but I always don't, because I don't know whether that's kosher or not.
You can up to $300. He doesn't have to declare it. So buy him a $299, and even if you do buy him a $300 gift, he can declare it and just puts it on a register. There's nothing. If you are happy with the service,
just take it and don't tell anyone. That's what I'd do.
Darren, lucky you don't have a licence. No, we have to declare things over $300. But and what that means is you just declare it. It doesn't mean anything. So get him anything you like.
What will you buy him, Joe, for up to $300?
I don't know. He's a young guy with a couple of young kids, so I always think I'd like to buy something for the kids. And he's just a great person.
Yeah, I was going to say, what a nice...
There should be more people in the world like you,
Can we
Joe?
get customers like you, please?
I wish we had some prizes to give you. We've got nothing here.
He's making us more money than we're spending, so I figure that's pretty good, isn't it?
Well done. Well, it's really good for positive... I like positive news like that, don't you, Mike?
Yeah, no,
it's
it's
so
great.
good. Yeah, and who does he follow? Maybe buy him a Collingwood membership or something.
Carlton, maybe.
No, not enough. They're coming out of the woodwork, aren't they?
They're everywhere.
It's like when you exterminate a piece of wood that's got termites in it. They all run out. They run out.
Now, you in your car, Joe, have you got a traffic report for us?
No, I'm walking my dog. And I listen to 3AW as I walk, so it's been fine hanging on.
Good on you. That's very lovely. All right, enjoy the rest of your walk and buy
Thank you
something
very much
nice.
for that advice. I will, definitely.
Thanks, Joe. Isn't she lovely?
Yeah, what a nice lady.
To Bill, good morning.
Yeah, good morning, Dominic and Darren. My question is, with a recent inheritance and combined savings, my wife and I have about $280,000, which we would like to put into superannuation.
Yep.
Now, the question is, we're both 65 years of age. My wife's going to retire at the end of this year. I intend working for a few more years, but which fund should we put it into, mine or my wife's?
Okay, it depends on the relative balances that you've got. So do you both have about the same amount?
No, I've got about $800,000 and my wife has about $85,000.
I'd probably tip it into your wife's account just to get the incomes. You can even take some of yours out, to be honest with you, Bill, and even it out, because once you've attained 65 years of age, you can access your super tax-free, and then you can put it into super funds up to age 75. So you've got a 10-year window here to do some spring cleaning. Don't rush and do it quickly. Get some advice, and if you need a financial advisor, I'm happy to refer you to one. Just go to collinshouse.com, click on the Contact Me button, tell me what you just said because I'll forget, and I'll get someone to help you. They might have to do a statement of advice, which is a legal document required under the law. They might be able to help you with general advice. So general advice is usually free.
Good on you. Thanks, Bill. To Sam, good morning.
Good morning, lads. How are you?
Terrific.
Good, Sam.
Good stuff. My wife and I have a joint self-managed super fund.
Yep.
Now, I'm a year older than her. I'll be 60 and she'll be 59. Now, the two properties in the self-managed fund, if I sell them after I turn 60, I know they're tax-free. But because they're in joint names, do I have to, is there a tax component because my wife's younger than me?
Sam.
Yeah, Sam, no. It's sort of the answer is it depends. Firstly, once you've attained 60 years of age, the super fund is not tax-free. You need to have satisfied a condition of release, which means that an arrangement under which you're employed has come to an end. So if that happens, if you quit your job or you move to another job, you satisfy that condition of release. That means then the super fund can move the money from accumulation mode, where it pays tax on at 15% on the earnings, to the pension mode, where it pays no tax on the earnings. Then you look at the assets in the fund. It'll be split between yourself and your wife, and it depends how your accountant has done the asset allocation within that fund to see whether it's segregated. So I'm sorry to be so technical. You'll need to sit down with your financial advisor and your accountant to sort out what they've done so that you can confidently move or sell one property and pay no tax. If you haven't segregated them now, you might have to split the fund. Sometimes it's cheaper to actually just split the fund. Sometimes it's better to segregate the fund. But please, this is a very important area. It's technical and it's a pain in the backside, but you've got to do it before you turn 60.
Thank you, Sam, for the call.
Okay,
Anything else?
Darren?
Yeah.
Go Pies, mate.
Good on you. There's five of us in the studio. No, we've got two. St Kilda. Who do you follow? Fremantle and 3 Collingwood.
That's the idea.
Yeah, beauty.
Thanks, Sam, for the call. And to Victoria, good morning.
Hi, Darren and Dominic. I'm wondering whether I'm 20 years of age and I'm just wondering where I should invest my money. It's currently in just a savings account. I think it's about 5.75%. And I've seen one of my friends has hers in a Latrobe financial account, and I think it's around 6.75 now. Do you recommend them, or should I keep it in my savings account?
I'll tell you what, Victoria, you know what I was doing at your age? Heading to the pub and not caring about anything and watching Collingwood. You've got your head screwed on the right way.
Having come now down to earth, Victoria, Latrobe's a great fund. It is in a high-risk area, though, because it's not like a bank.
Yeah.
We do buy Latrobe for our customers, but if you gave me $100, we'd put $5 with Latrobe, $5 with XYZ, and we'd diversify. So the only thing wrong with it is you can't diversify much in it because it's an asset class. It's a great asset class. They're a great company. They've never had a default. So as a financial advisor, we're taught to encourage people to diversify. So I would probably go into a diversified portfolio. In our portfolios that Mike and I run, we've got Latrobe in some of them. Yes. Yeah, we do. So we've got maybe 5 or 3% of Latrobe, and we've got 97% a whole lot of other stuff. So go to collinshouse.com, click on the Collins House online button, have a read. Maybe the high income portfolio would be good for you. It does go up and down like a honeymoon blind, to quote the late Ernie Sigley, but it gives you a greater return than the bank account. Although 5.75
Not bad.
is a damn good rate.
Yeah,
I saw
no, it just went up with Westpac, yeah.
Yeah, and 5.9.
How you going, Victoria, studying your interest rates?
She's
Got
not
an
at the
email
pub,
about
Darren.
it.
I might add, though, that don't have it all in cash. At your age, you should be looking long-term, looking for assets that will grow above the 5.7.
Yeah, that's true.
Because effectively, you're only 1 or 2% above interest rates. And that's not enough to grow your wealth over
So
time.
what do you mean by assets? Well, buy a house.
No, look at the diversified pool of assets. Either get someone to run it for you where they can access the equity market, they can access overseas equity markets, they can take thematics, they might have a view on food that's going to get more expensive over the next 10 years and buy an ETF which gives exposure to that.
Are you listening to this, Victoria?
It's not all in one
Yeah, that's
area.
very true. And all I'd say is it depends on your time horizon. If you're saving for more than 5 years, I'd put it all into what Michael's saying. If you're saving for just 24 months, fixed interest or high income portfolio. And if you're saving for 3 months, bank only. So it depends on your long-term horizon.
Gee, you're on the
Thanks.
right track, Victoria.
Well done.
Cool. Thank you.
Cool. Cool's right. I'm very impressed with her and our other caller, Joe, walking the dog, buying presents for her advisor.
It's been a great day.
Been a great segment.
Yes.
Yeah. Dr. Michael Saba, thanks for coming in, and absolute pleasure to see you again.
How's the ingrown toenail?
You fixed it last time, but you're not that kind of doctor, though, are you?
No, he's a
right.
different sort of
I
doctor.
found that out last time.
Thanks, guys.
Dominic, lovely to see you too. Collinshouse.com is the web address. Thanks, gentlemen.